Hello, everybody, and welcome to Vintage Market Inside the Charts. My name is Tamar Mehr from Trade with Precision. Now, over the weekend, Israel has carried out a restrained attack on Iran, and Iran has downplayed the damage of that attack. And in response, we saw the price of crude oil actually opening in a gap down. So we opened here at a level in and around that 67 area. And if we'll take a look at the higher time frame at that level, we can see the importance of this level. We can see the plenty of touches that we had at that level in the past. They're not quite precise, but from this area, we've seen to have buyers coming back to defend this area. Let's take a quick look here on the monthly chart. We can also see this level playing as a resistance level. So if we'll take a look here at this area, we can see it's been a resistance level in the past, broke above it, pull back into it once again, and then push to a higher high. So I would expect a bit of a pullback around this level, potentially to close the gap, but this market on the higher time frame is still in a downtrend. Now, also over the weekend, we had election in Japan, and the ruling party has lost its majority, which could spell uncertainty for investors. And in response, we saw a gap down on the yen, so a weakening yen across the board. So looking here on pound yen, we can see the consolidation underneath that area of 195. It's been quite a strong level here in the past. We consolidated, broke above it, pull back, tested it from above, and now we're continuing higher. So we could come up around the area of 200, so also around number or psychological level, and I'll be looking for a bit of a pullback and a continuation of this move. Here we've got the moving averages 10, 20, 50, all fanning, all in the correct order for an uptrend, and a nice convergence here on the momentum indicators. Now, the reason I really like pound yen is the higher time frame. So on the higher time frame here, the weekly is back into an uptrend, and the moving averages already crossed over to the correct order. And if we'll take a look here on the monthly chart, we also kept the monthly chart in an uptrend. So even though we had a very deep pullback here, we can see that we still made a higher low. So we came very close to the previous swing higher low, but haven't broken it. So the higher time frame on pound yen are still nice and in an uptrend. Another strong mover against the yen is the Swissy. And the Swissy is back into an uptrend here on the daily chart. And as we can see, we're coming up into a consolidation level. We are pushing underneath it. And what I would like to see, it's actually a quick break above that level and then a pullback into the averages. So I want to see the response that the market has to that level before looking for a pullback and a continuation of this move. Moving on to the US, and this is the last week of the presidential elections, and poll shows a tightening race. And with this increased uncertainty of the presidential result, we've seen investors pushing the price of gold higher. And what we've got here is the daily chart, and we can see it's a beautiful and a very long-term uptrend. We've got clear series of higher highs and higher lows, moving averages 10, 20, 50, all fanning, all in the correct order for an uptrend. We do have some divergence here, though, on the momentum indicators. Now, if we take a look here on the higher time frame, we can see how far the market has pushed. So what we've got is also overextension, meaning quite a distance between where price action sits right now and the moving averages. We had a strong push here with not much of a pullback. So a quick look here on the monthly, and we can see the big distance that we have on that overextension. So I wouldn't mind seeing a little bit of a pullback, releasing some of this very strong buying pressure. From a higher time frame point of view, from the monthly, a pullback in and around the 2500 could bring us closer into the averages. But if we go back here on the daily, that would mean a very deep pullback and a break of this current uptrend. So in and around this area, area, we can see we had a couple of touches. So this is for a long-term approach. But for the intermediate time, I'll be looking for quick reaction to this level in and around the 26.90, keeping in mind that this market is very, very overextended. Happy trading, everyone. Bye for now.